Hello, everybody. I'm very happy to be here. Maybe you should expect a Chinese guy to speak to you, but unfortunately, it will be a Dutch guy who has been a long time in China and tries not to be assimilated there. So I try to give an objective, at least try to give an objective view on what is happening in China. I think also that this seminar is very actual, is very up to time, because China is just underwent an enormous regulatory overhaul, and I would like to discuss a little bit why they did this and what the impact would be for foreign investors in the insurance business. So I try to talk about three things. First, the China insurance market, just explain the foreign insurers active and the Chinese insurer, which are the better and the more of the bigger parties, and then go up to the overhaul and why China has opened up and the new regulations in that respect, and then eventually try to say something about trends and opportunities. So let's start with China's insurance market, as Jim just indicated. You can see in this evolution of China's insurance industry that the premium income has really gone through an enormous growth rate. In certain years, you find growth rates of 50%. In 2008, you can see that, 2010, 2016. So this is a double-digit growth. It's an enormous development, and also has an enormous impact on the influence of insurance companies in the economic sector. At the same time, you will see that the life and non-life premiums differ a little bit. Life is quite bigger than non-life, but in general, growth rates are tremendous. The question is to what extent foreign insurers are active in this field. And that's why we added here the top Chinese life insurers, top Chinese non-life insurers, and then the top foreign invested life insurers. And then you will find that by far the largest insurers are, of course, the China's state-owned enterprises, and the premium income is at the same time enormous. So here the question is to what extent the foreign insurers really matter in this development. On one hand, it's very logical. China is having certain particularities. You have to know the government, you have to know the policies, and you have to reach out to the consumers and the potential customers. And in this case, Chinese are far better in this. But there is another angle on this, and that is that this insurance market for a long time was not open. So it was a restricted economic sector in which foreign insurers were limited to be active. Eventually, this was an untenable situation. At least this growth was untenable because it led to excess in the market. And the supervisor at that time and the guy leading the supervision of the insurance business, Xiang Junbo, had all kinds of policies to allow this growth from happening. During his tenure in 2011, he came to prominence in China. He really started enormous liberalizations in the insurance market. So he allowed license easing requirements, and at the same time he allowed insurers to invest heavily in equities, and allowed life insurers to have wealth products with an enormous high risk and high return rate. And this did very well. In his period, you had doubling of premium income. and at the same time tripling of assets. So the impact of this policy was tremendous. On the other hand, there was excessive risk, and there were all kind of irregularities that eventually led to his downfall. So in 2017, he was arrested, and it turned out that he had taken $3 million bribes and whatever. This is not only a political arrest, but he was eventually replaced, and the monitoring and regulatory policies became much more restrictive. So now we have in China a new chairman of the China Regulatory Board, which is Guo Shuqing. He's really well respected, and he is very professional, and he has stimulated jointly with his team a tremendous overhaul. So the aim in 2017-2018 was eventually to change and refocus the insurance sector. And at that time, they created a super regulator that would supervise a bank and as well as the insurance sector, and improvement of solvency. They were addressing excessive risk and a redirection of the whole business to sound risk management. So there is an enormous new amount of regulations in 2018 that caused that the sector was to be disciplined. There were strict compliance regulations, but of course that takes time to be implemented. So if you see that for instance, at Anbang, who was an insurer very little known 5 years ago, in 2018, they had $311 billion in assets. So that fast the business grew. So there had to be something done, and that was done in 2018. Let me now go at the same time that this restriction of risk, more stringent solvency rules, at the same time there was an opening up of the market for foreign investment. What was the reason behind that? I will address in a few minutes, but let me first explore what happened in 2018. All kind of restrictions in the setup of foreign insurance firms were abolished. So it was no longer needed to have a 2-year period as a rep office before you could set up a insurance firm. Also, the maximum foreign equity in life insurance, that was always maximum 50, was increased to 51 in 2019, and it is going to be abolished in 2021. So at that time, even life insurance will be completely open. Also, insurance brokerage firms were allowed to be operated on the basis of national treatment. That means they were going to be free. It's important, I think, because at that time, claim handling, also the drafting of insurance plans, consulting on risk assessment and compliance are all open to foreign investment. Before that, it was not, only in specific sectors. And insurance intermediaries activities received national treatment. This eventually had an impact because foreign insurers were looking into this enormous potential in the economics, in the insurance market, and try to consolidate, increase their activities, and also take over part of the equity in their joint ventures. And this really took effect already in 2018-2019. So I think Allianz eventually received approval to set up the first fully owned, foreign-owned insurance holding company, and AXA also purchased the remaining stake from Tianping in the joint venture, and now have a 100% wholly foreign-owned insurance company called AXA China. And this only was approved in August from this year. It's not yet registered in the Chamber of Commerce, but all the regulatory has been approved, and it is an example that things are moving in China and opportunities are there. What else is going on? Well, first, I should maybe say also that the tension, the reason behind this opening up was that China would like to invite management know-how, risk assessment know-how into China in order to deal with the problems in the Chinese firms, especially the back office problems, so that management would improve and foreign insurers have more experience in that respect. On the other hand, it was also tension of trade between the US and China, and Trump's approach towards China, that they would like to show that China was really improving and also allowing insurers into the Chinese market. Now, what else happened in that period? And that is that I spoke with one of the partners of BLA before, who just came from Shenzhen and was talking about the Greater Bay Initiative. You see that in the south of China, there is a kind of development plan. It was promulgated in 2018. So in order to allow Hong Kong insurers to become more active in the south of China, so the Greater Bay Area and the harmonization of the whole south of China, including Hong Kong, is part of this plan, so that Hong Kong firms and also Singapore firms who have establishment in Hong Kong can start offering services through branches in the Greater Bay Area. At the same time, in the past, it was like that Chinese insurance firms who ceded risk to a qualified Hong Kong firm eventually still had higher reserve ratios. That was now changed. So if there is a reinsurer from Hong Kong, the reserve ratio will be reduced accordingly. So this will allow a lot of traffic and a lot of exchange in the south of China. This is also done because China has another plan, which is the One Belt Road initiative, in which you know that there are enormous investments in infrastructure that eventually also need insurance and need risk assessment, and the Chinese firms are not up to this task. So the cooperation with Hong Kong firms is important. The professionalism of the risk assessment and of the Hong Kong firms is important, and that's why also part of this scheme is to integrate and to harmonize through mutual recognition of solvency regimes between Hong Kong and the PRC. This connection. So it's not only opening up of the insurance market for foreign investment, it's also cooperation, and then on a regional dimension, starting with south of China. Now, let's discuss a little bit trends and opportunities in this very short 20 minutes. One issue in which China and also India is, of course, extremely good is digitalization and everything related to InsurTech. You see a trend, and that will not stop, and it will have an enormous impact, I think, eventually globally, in which China, maybe also India's largest tech and insurance firms, joined forces with the new technologies to digitalize the insurance industry. But China has another element to that, and that is it has enormous e-commerce platforms like Alibaba, JD.com, who have an enormous reach to customers. And you see that these firms start to invest in insurers. So you see GD.com, they became an important shareholder in Jingdong Alliance Property Insurance. They have booming business in this field. Alibaba has Ant Financial that has a booming health insurance business. It's only 2-3 years old, and it is enormous. It's growing enormously. I think in 2019 or 2018, you have ZhongAn, that was China's first complete online insurance company. So a lot is happening. And if you speak with foreign insurers, they say, look, we have to be in this market. Otherwise, we might reach out of the opportunities and of the learning curve that we have to go through in these markets that we can bring back home. So this is another reason why these cooperations take place. Why is InsurTech, I think, in China so effective? It's probably also because the data protection laws in China are a little bit lax. So this means that you can make fast moves in collecting, eventually selecting data and using it to make new products and get to the customers. In Europe, it's much more difficult. In the US, it's more difficult. In China, it is, although the laws are might improve, in practice, I think the enforcement thereof is not that big. But it allows business to develop very fast. If I see other opportunities for foreign insurers, I think you will be able to tap to the aging population, and there is a retirement, or the products relating to retirement and pension are sophisticated products. It's long-term product, and China is still, and the insurance companies are good in sales, but in the quality of the products, they are behind. Especially, I think the wealthier and well-educated middle class is looking for products in Hong Kong rather than in China with respect to pension and retirement. On the other hand, I think foreign insurers will remain to be dependent on the Chinese insurers for the Chinese market, because the Chinese insurers have a better network, better access to the Chinese people, better understand what they are looking for, and therefore I think eventually to be active in the Chinese market, it's important to keep cooperation with the Chinese insurance businesses. As a final note, and this probably will give the potential of the Chinese insurance market, the penetration rate in China is not that high yet. It has substance, it's 4.42%. But if you compare it with Hong Kong or with Taiwan, you have to deal with penetration rates up to 15-16%. So there is still an enormous gap to develop, which will cause, I think, enormous opportunities for foreign insurers and for Chinese insurers. So this will be the end of my speech. Thank you a lot.